Greetings to all. I am D. Anthony Sami, Assistant Professor, Department of Economics, St. Xavier's College, Palayam Kotai. In this session, I am going to explain about Introduction to Taxation and Canon of Taxation. Before going to explain the Introduction to Taxation and the Canon of Taxation, I would say that what is fiscal economics? Fiscal economics, also known as public finance. It is a field of economics that examines how government raise and spend money. It covers various aspects such as taxation, government expenditure, budgeting, and public debt. Now I explore the introduction to taxation and canon of taxation. I would say, what is taxation? What is taxation? The most important sources of revenue of the government is tax. Tax is a compulsory charge or fees imposed by government on individual or corporations. The person who are taxed have to pay the taxes irrespective of any corresponding return from the goods and services by the government. The tax may be imposed on the income and wealth of a person or corporation, and the rate of taxes may be vary. The taxes can be classified into two types. One is direct tax, another one is the indirect tax. Direct tax. A tax is the tax whose burden is borne by the same person on whom it is levied. The ultimate burden of taxation falls on the person on whom the tax is levied. It is based on the income and property of a person. Indirect taxes. An indirect tax is that tax which is initially paid by one individual, but the burden of which is passed over to some other individual who ultimately bears it. It is levied on the expenditure of a person. Indirect taxes are excise duty, sales tax, custom duty, value added tax, goods and service tax. Now moving into the canon of taxation. By canons of taxation, we simply mean the characteristic or the qualities which a good tax system should possess. In fact, canons of taxations are related to the administrative part of a tax. Adam Smith have given 4 important canons of taxation. These canons are: first canon is canon of equality, second one canon of certainty, next canon of economy, and canon of convenience. Now we will explain about the canon of equality. Canon of equality states that the burden of taxation must be distributed equally, equal among the taxpayer. However, this sort of equality of justice, because not all taxpayers have the same ability to pay taxes. Rich people are capable of paying more taxes than poor people. Thus, justice demands that a person having greater ability to pay must pay a large taxes. If everyone is asked to pay taxes according to his ability, then sacrifice of all taxpayers become equal. Next, canon of certainty. The tax which an individual has to pay should be certain, not arbitrary. According to Adam Smith, the time of payment, the manner of payment, the quantity to be paid, that is tax liability, are all to be clear and plain to the contributor and to everyone. Thus, canon of certainty embarrasses a lot of things. It must be certain to the taxpayer as well as to the tax levying authority. Not only taxpayers should know when, where, and how much taxes are to be paid. In other words, the certainty of liability must be known beforehand. Similarly, there must also be certainty of revenue that the government intended to collect over the given time period. Next canon is canon of economy. This canon implies that the cost of collecting taxes should be as minimum as possible. Any tax that involves high administrative cost and unusual delay in assessment and high collection of taxes should be avoided altogether. The last canon is the canon of convenience. Taxes should be levied and collected in such a manner that it provides the greatest convenience not only to the taxpayer but also to the government. Thus, it should be plainness and trouble free as far as practicable. Every tax stress Adam Smith act to be levied at time or the manner in which it is mostly likely to be convenient for the contributor to pay it. Next, the above discussion, if follows the taxation serves as the following purposes. First one, to raise revenue for the government. Second one, redistribute income and wealth from the rich to the poor people, and to protect domestic industries from foreign competition. The last one, to promote social welfare. Thank you.